Hi there, welcome to Kneppy Invest. The other day I did a video on Tesserent potentially breaking out. We did see the share price rise above a fairly strong resistance level. However, that potential breakout failed. We did see the share price pull back below that resistance level. So it was a false breakout. And I was thinking there was potential, the market was getting excited about the release of the quarter report. So this potential breakout happened a few days before Tesserent released their Appendix 4C. So I think the market might have been getting a little bit excited about the potential of a good quarterly results from this company. So I will be looking at Tesserent's quarterly report in this video. It has been released. Initially, my thoughts around Tesserent's Appendix 4C was a bit blah. Then as I delved a little bit deeper, that blah became a meh. And then I think I'm underselling how Tesserent is performing by viewing this quarter report as a meh. I do think Tesserent has potential to become consistently operational cash flow, free cash flow, and profitable over the next few years. They haven't quite got there on a consistent quarterly basis, but I think there is potential of that happening. Now, there is a reason why this particular quarter was operationally cash flow negative, and I will be looking at some of the commentary the company will give in this video. So I'll have a look at the Appendix 4C, the cash flow statement, but I'll also look at some commentary, including why the company was operational cash flow negative in this quarter, and also looking at the breakdown between organic and acquisition growth. And that's quite important. You do want some organic growth in there. You can't grow just from acquisitions. And the reason that's important for Tesserent is because this company is acquisition hungry. Well, they have been over the last, say, through 2 or 3 years. So before we have a look at the Appendix 4C, just a few facts in regards to Tesserent. Tesserent is a cybersecurity and secure cloud services company founded in 2015, listed on the ASX in 2016, fairly early during that year. The company didn't have much success, and then they went down a different route or road or path. They decided their business model wasn't working, and you'll be able to see that when we look at the cash receipts history. And then they decided they needed to do some acquisitions, and that's what they started about 2 or 3 years ago. They have bought a lot of companies, small companies, and that's one of the reasons why this company has grown their receipts quite considerably over the past few years. But when you look at the share price of the company, share price is actually lower from when they listed, even though the markup is 10 times higher. So the markup was $20 million when they listed. Now it's over $200 million, but the share price has actually decreased. And the reason behind that is because the shares on issue has significantly risen because of all the acquisitions this company has done. And right now, the markup of Tesserent at 16.5 cents is 208 million, which is interesting because the last time I did a video on Tesserent, the share price was 16 cents. So the share price really hasn't moved over the past 3 months. And that is the problem with this company right now. Share price is really not doing anything. That's why I'm waiting for a breakout in the share price. Now, you might say, why wait for the breakout in the share price? Why not just buy in if you are positive and bullish about the future of this company? Well, I'm not 100% bullish. I'm not 100% positive that this company will be bigger in a few years' time. So I want to be patient, and I want to see confirmation that this company is succeeding in what they're doing. And good confirmation is when you do see a breakout in the share price. Preferably, that breakout in the share price is on the back of some good financial news. That's why I was hoping the share price was going to break out on the back of a good Appendix 4C for the March quarter. Ticker code for Tesserent is an explosive TNT. Now let's have a look at their Appendix 4Cs. And well, the reason I say Appendix 4Cs plural is because I'm going to go back 1 year ago, look at the March quarter for financial year 21, and then just compare it to the most recent quarter, just to see how the company has performed. And we will see receipts from customers grow. But the big thing is comparing the growth of receipts to the growth in expenditures. And what we want to see for Tesserent and other companies is we want to see receipts growing at a greater rate than expenditures. And if that is happening, that means the cash flow from operations will increase over time. So we'll look at that in the next slide, but let's go back 1 year ago. this company did receive $22 million in receipts and was actually operational cash flow positive in this particular quarter by $1.8 million. Now, even though they were operational cash flow positive, they did spend a lot of money in financing and investing activities. Acquisition, $546,000. Deferred settlement, $1.2 million. Interest, $329,000. That's very important for this company. They do have a big loan, well, 2 facilities at, I think it's 8.5 and 8.9% interest rates. So they do have to spend money on interest payments. And because the money spent in investing and financing activities was greater than money producing cash flow from operations, this company actually burned through $300,000 of cash in this particular quarter and finished the quarter with $7.7 million. So let's have a look at the most recent quarter to see how this company has progressed over the past year. So again, the main things I'm looking for here is the growth or the relative growth of cash receipts to expenditures. So receipts to customers did grow at a considerable rate. In fact, it grows by $16 million. Some of that was because of acquisitions, but there is organic growth here as well. And the company showed that in their presentation or their activities report or their commentary, whatever you want to call it. But cash receipts did grow 16 million, but product manufacturing operating costs grew 10.3 million and staff costs grew by 7.8 million. So together, just those two costs grew by over $18 million. I'm not even talking about advertising and marketing, which do grow by a little bit, and also administration costs grew by a little bit as well. But you can just see through product manufacturing operating costs and staff costs, they grew at a greater rate than cash receipts. So Tesserent went from being operational cash flow positive 1 year ago in this quarter to being operational cash flow negative, even though cash receipts did grow by 16 million. And not only that, they also had to spend $768,000 on interest payments because of their loans. So altogether, the company burned through $3.6 million in cash in this particular quarter. And the cash on hand actually fell from $13.6 million to $10 million. I've already mentioned the debts this company has, and I'm always looking at Section 7 in the Appendix 4C just to see any facilities a company has, and more importantly, the interest rates they have to pay. So for Tesserent, they have 2 facilities with pure asset management, $15 million at 8.9% and $20 million at 8.5%. I would prefer companies not to have debt when the interest rates are that high. So even though we are in a low interest rate environment, which will be increasing, interest rates most definitely will be increasing, there are companies out there, particularly small cap companies, who do have loans with high interest rates because the higher risk attached to these companies. And Tesserent is one of those companies. So I would prefer Tesserent not to have debt. And if you just do some basic calculations, at about 9% interest rates on 35 million, that means they do have to repay about $3.2 million of interest per year, so $800,000 per quarter. And the most recent quarter, it was just under $800,000 of interest. So again, that's one of the negative things about having a lot of debt at high interest rates. You do have to pay interest on that debt. So that's one thing I'm looking closely at Tesserent. And if I do see debts actually increasing from here, that would be a bad sign moving forward. The first thing I usually do when I see an Appendix 4C from a company is go straight to the cash flow statement. And then if I do or am interested more about the company, I will have a look at their activity report or their commentary in regards to the last quarter. And Tesserent did have a fair few bits or little bits of information that I did actually like, including this organic growth, organic versus non-organic or acquisition growth slide in there. So it's just comparing the organic growth they do have. And this is very important because for companies that are highly acquisitive, you want to see also some organic growth, because if they don't break it down, then how is the company growing? Is it just through acquisition? So I'm really happy Tesserent included this. Now they're looking at EBITDA, so earnings before interest, taxation, depreciation, amortization, and corporate costs. I do wish they'd be consistent and use the one thing here, EBITDA or EBIT or something like that. But anyway, the main thing here is they've broken down quarter on quarter or quarter by quarter organic growth and acquisitions. For instance, in the first quarter, financial year 22, 45% organic growth, 85%, 85% acquisition growth. The next quarter, it was 30% organic growth, 71% acquisition growth. And in the most recent quarter, 36% organic growth, 83% acquisition growth. So altogether, the first 3 quarters of financial year 22, Tesserent has grown their EBITDA by 36% through organic growth and 81% through acquisitions. So this company is growing organically. So it does look like the acquisitions they have made previously are growing. And that's the main thing I can take away from this particular slide the company released in their commentary or their presentation or their activities report. One of the main flaws of Appendix 4C or just a cash flow statement is though most companies don't really talk about changes or movements in working capital, that can have a significant effect on whether a company is operational cash flow positive or negative. And sometimes a company will include it in a commentary, and Tesserent did include some information on this in the commentary. So why was Tesserent operational cash flow negative in this particular quarter? So the company recorded operating cash flow outflow in the third quarter of $1.1 million as a result of movements in net working capital. So what is movements in net working capital? We're talking about trade debtors. I think they call that just debtors, trade creditors, changes in inventory, that sort of thing. So right now, a lot of companies might be building up their inventory because of supply pressures. That would have a negative effect on the cash outflow or inflow in operations. So you do have to take that into account. And down the road, that have a positive effect. So the reasons why Tesserent was operational cash flow negative was because of an increase in debtors and unpaid work in progress balance, driven by growth in the corp's or the group's workforce, coupled with a seasonal step up in the level of consulting activity in quarter 3. Question is whether this does continue into the next quarter or whether the company becomes operational cash flow positive by even larger amount. I think that's a possibility as well. So I will be looking for a really good quarter, the last quarter for financial year 22, and that could be the catalyst for a breakout in the share price for Tesserent. One thing I always like to look at for every company is receipts history, and I do track receipts for most companies that do release an Appendix 4C. I don't track the receipts for those companies who have no receipts. So there's quite a few companies who are relying on doing capital raisings. Those are sort of those biotechs who are in clinical trials, have no products they're selling right now, and they just hope that one of their trials is successful. Also, mining, exploring companies, a lot of those companies have no cash at all coming in their business, and again, are relying on capital raisings. So if we go back to when this company listed on the ASX, and this the first quarter was the March quarter 2016, and from the March quarter 2016 all the way through to the June quarter 2019, cash receipts was going sideways. In fact, cash receipts grew by 0 from that quarter in 2016 to that quarter in 2019 at 1.3 million. And then the company started making acquisitions. Maybe their board came together and went, this is not working. We are not growing. We need a different business model. And maybe they decided that they need to do some acquisitions. And they decided on that new business model in 2019. Ever since then, cash receipts have grown at an probably won't say exponential rate. It looked like it was trying to grow at an exponential rate, but receipts have leveled off over the past few quarters. But we have seen a significant increase in cash receipts from 2019. Cash receipts has gone sideways over the past 3 quarters, sticking around or just below $40 million. I do think with the growth in the business, growth in annual recurring revenue, we will see an uptick in receipts over the next few quarters. So I'm hoping receipts will head towards $45 or even $50 million in the June quarter and then the September quarter following that. 2 of the most important things a company has to do, apart from capital allocation, work culture, is to increase the value of the company and also, more importantly, create value for shareholders. Now, Tesserent has definitely increased the value, or the management have definitely increased the value of Tesserent over the past 5 years, ever since they've listed, because the market cap of this company has increased from $21 million to just above 200 million. So you might be fairly happy as a shareholder. Unfortunately, the share price has actually gone backwards from 20 cents to 16.5 cents. So how can the markup or the value of the company increase, yet the share price go down? It's all because of shares on issue have increased by tenfold over the past, or ever since they've listed. In fact, they've increased from about 100 million to over 1 billion shares because of the acquisitions this company has done. So the main thing to look for whether a company's management has created value for shareholders is to look at the share price change, not the market cap, and the share price has actually gone down since they've listed. Now, the share price at one point, it was down as low as 3 or 4 cents. So since then, I think it was maybe 3 or 4 cents way back in 2019 when they realized the model wasn't working. So the management actually has created value for shareholders since then because they have changed their business model. But the main thing moving forward for Tesserent is to get that share price above 20 cents, to get that share price moving upwards, to get that market moving upwards, and not to dilute shareholders anymore. Now, the best thing they can do is to generate cash flow in operations and then fund acquisitions from that cash flow. And that goes back to the most important thing a company's management has to decide upon or do, and that is capital allocation. And that becomes very important when a company starts producing lots of cash flow. What do they do with that cash flow? So they can do acquisitions, buybacks, dividends, or just do some research and development just to increase the value of the company in the long term. So when Tesserent becomes consistently operational cash flow positive, free cash flow positive, it's up to management to decide what to do with that cash coming in. And one of the things they can do is to do some more acquisitions. And that is a very legitimate way. And by using the cash flow instead of going back to the market for capital raisings, that means you won't dilute shareholders anymore. You won't increase the shares on issue. So that's one thing I am looking forward or looking for in Tesserent's management over the next few years to see what they do with the expected cash flows coming into the business. Now onto the chart for Tesserent, and this goes back almost exactly 1 year ago. Share price got as high as about 33 cents back in July last year. And there is that support level that became resistance. So support becomes resistance when the share price falls, and then resistance becomes support when the share price rises above that level. And a nice little solid resistance level right now at 18.5 cents. So what I'm doing now, because I am bullish, not completely bullish about this company, is I'm waiting for a breakout above that resistance level at 80.5 cents. So I did a video the day the share price of Tesserent went above that level. Now, it was a false breakout because the very next day, share price plunged something like 10% back below that level and has stayed below the level by 18.5 cents ever since then, which has only been 3 trading days. But the share price has now dipped to 16.5 cents. And not helping Tesserent is overall weakness in the market. The Nasdaq was down another 4.6% on the Friday, and that could have negative impacts on the Australian market when it opens on the Monday. So overall bearish outlook in America right now, particularly among tech stocks, which Tesserent is or does fit within that. So that could drive the share price down from here. So that's a possible outbreak has failed. So I've kept Tesserent on my watch list. And if I do see the share price breaking above 18.5 cents, particularly if it coincides with some good financial news, that's when I will take a position in this company. That's all I have for this Appendix 4C March quarter video for Tesserent. I do describe it as a meh sort of quarter, just in the title of this video. But I've changed my opinion a little bit. I've become a little bit more bullish on this particular quarter from Tesserent, just simply because of some of their commentary. And I am expecting a better quarter. So an operational cash flow positive quarter, $3 to $5 million for the June quarter. And hopefully they can continue that momentum into September quarter. Now, Tesserent's management did refer to this company being highly seasonal. So you do have to take that into account as well. I'm not sure why, but there's definitely some reasons behind that. Management wouldn't say that without it being true. So if you do have any questions about Tesserent, I'd love to hear your opinion, particularly if you know more about this company than I do. What is your opinion on the future of Tesserent? I'd love to hear your thoughts. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.